Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets. Let me just get started with the week for the metals. Over the last week, gold is up 2.8% to $2,450. Silver is up 4% to $27.54. Platinum up 1% to $922. Palladium had a good week, up 6% to $916. The dollar is flat, and the S&P was up 3% to 54.54.
The white metals, finally joined the parade, didn't they? I mean, every week we've been talking about the white metals being down disproportionately to gold. And the gold to silver ratio is still back up to 89, so not a whole lot of percentage change between the two. But platinum and palladium, finally get an opportunity to talk about those. Miles, that's not a whole bunch of action. I mean, the volatility kind of continues because, again, that's just from Wednesday to Wednesday recording as we post on Thursday. There is volatility within the week that is more than the numbers you just described, Rob. But, Miles, nothing's changed technically for you in terms of support and resistance levels?
No, we haven't really seen any significant higher highs or lower lows or anything like that. From a spot price perspective, not really. I'd still want to see something like engulf the previous price. Are we showing some significant movement above and starting to establish some territory above? So at this point, no. I'm still looking at the same sort of trading range with gold in a rising channel up near the top of that channel and looking real strong. You know, the last time we went up to touch that channel back in the middle of July, we didn't come anywhere near the bottom before we turned back around and right now testing it again. So we could go into fall with a really strong gold price, and that's with silver looking a little bit weaker right now. Silver ratio's gone from the mid-70s back up. We touched 90 again, guys. What are y'all thinking on silver?
Well, I still think that it's a buy signal. We don't know if this is the top of the ratio. Remember, in the 2008 drop, it went to 100 to 1. 2020 with COVID, it got to 125 to 1. So those are your outlier events where you might go really heavy silver. For now, it's a different percentage of the new acquisition that would be in silver for me. But you don't need to overshoot either. Silver's volatility is still existing.
Well, even at 90 to 1, the premiums on gold and silver bars and gold and silver coins are reasonable. In fact, we are pretty much where we were as far as purchasing physical gold and silver when the gold and silver ratio was at 120 something to 1. In order to purchase or buy or trade, you were still about 90 to 1. Even though the paper market was saying it's way higher than that, that was reality. So we're in a good place right now if people want to play that ratio.
Such a good point. The premium has to come into play.
It does.
And likewise, when we're doing swaps, taxes have to come into play. It's not as simple as looking at the spot price. And Miles, you mentioned something that I think is really important for the listener to take away, and that is there are different sources of the values of gold and silver. You mentioned the futures contract. So yes, the December contract got like 2,513, and I had some people call saying, oh, gold hit 2513. It's like, no, that was a December futures contract, but there's the LBMA and the NYMEX, and those also vary in terms of the spot price that we have to follow, and often at times are alluding to. We're alluding to the NYMEX on this program and what we're seeing there. And so sometimes people will call and say, why are you $7 difference on gold or $11 difference on gold compared to what I'm seeing on this other site? It's going to be London versus New York for the most part. So keep that in mind. There are indications of movement only, not necessarily the value of any given finished product.
And people also will call and say, well, if you're charging 2% or 5% or 6%, these other guys are charging 1 or 2% or 5%. Basis what? And that's always the bottom line. Basis what?
That's right.
You know, with our vaulted program, we're 1.8% above spot. Spot is our basis. So you might see another website that'll say something different, and it makes the vaulted fee look high, but their basis is higher, even though their quote-unquote fees are lower. So, you know, you really need to talk with somebody that knows what they're doing. I was dealing with this with a client yesterday, and she was trying to come to grips with, well, if your fees are such, then, I'm like, the price is what matters.
The price per ounce is what matters. And I'm glad you're saying this because that's where the scams in our industry lie.
Exactly.
Is you've got to break it down into the price per ounce divided by the spot price and use the NYMEX for consistency. And then you'll understand what the premium is. So to your point, Rob, on premiums being reasonable right now,
they are.
That doesn't mean anything to anybody until they understand what you're paying per ounce. So if somebody's trying to talk you into a quarter ounce product, you need to multiply that price times 4 to equal an ounce. And then you divide that by the spot price. And that is a percentage over spot that will give you the premium. So be armed with spot price, the premium based on the per ounce price, and then the spread.
The spread and the fee.
And the fee will be incorporated into that overall price, which is part of the premium. The commissions and the brokerage fees make up part of the premium that you're paying per ounce. So now you kind of know how to price and avoid anything that's over 20%. I mean, Silver Eagles get there somewhat consistently, but for a general rule of thumb, the problem that these companies are doing is they're ripping people off because they're charging 75, 80, 85% premiums over spot. And the client doesn't know because the client doesn't understand the math.
And they assume that everybody's dealing at the same basis.
That's right.
All they know is, like, you go to a stockbroker or a financial advisor, what are your fees? And the fees are stated. And so everybody's basically playing on the same field. But when you're in the metals market, the basis is what matters, and then the fees. So you get focused on fees versus basis. What's your starting point? What are you basing your fees off of? And what is the ending price?
There you go.
Very important.
Well, not a whole lot for the chart monkey, Miles, to report on. It's kind of a relatively flat week, but from the fundamentals guys' standpoint, that volatility remains. I mean, certainly geopolitical tensions are there. Just to kind of talk about why is gold strong and silver soft, I get asked that question a lot. Silver's not the money metal that gold is. Silver, as you mentioned last week, it needs inflation, but also economic expansion and kind of a hotter economy than what we see.
Right. I'm just glad that silver had a better week than the S&P, and palladium did also. I mean, the white metals are making a recovery.
Yeah, and we'll see if it's sustained because, Miles, you alluded to kind of a seasonal bias. You talked about this turn of the year. We do, right, Rob? I mean, you've been doing this 40 years almost. The seasonal bias is real, kind of a low in the summer, a rally in the fall, rallies again in the spring. I mean, do you see anything in the underlying fundamentals that would change that trend this fall?
The only thing I can possibly see, and like we talked about the yen carry trade last week, that could be setting up for a washout in equities, and that will affect the price of gold in the near term. And we talked about that last week also. So that's the only outlier. Liquidity, like David McElvaney and Kevin talked about last week, is drying up. And so if this yen carry trade continues to roll forward and cascade, affecting global liquidity, yes, you could see a sell-off in the stock market. I don't know that. I'm not predicting that, but that could happen. And then, yes, then we could see a drop in the price of gold and silver. But in my experience, just in the last 20 years, we've seen two notable times when that did occur. And within a matter of weeks or even just days, the physical price, because of the premium, was back up over where it started a few days or a few weeks before.
So this fall, too, I mean, we have the geopolitical things that we talked about. If there's a calming of the waters, that could certainly drive the gold price down. That's not what silver tends to respond to. It could be why the ratio's high. You also have the rate cut. That's not what silver responds to. It's not the monetary metal. So if they don't cut rates, you could certainly see gold come down a little bit, but you could also see it spike a little bit if they do get this rate cut. And that's kind of the expectation.
It doesn't make any sense. I mean, even today, the CPI came out and it was relatively benign. The rate of growth in CPI was slightly lower than analysts had predicted, and that caused a sell-off in the gold price by $20 just today. Well, because Wall Street said this guarantees a rate cut, either 25 or 50 basis points, that's baked into the cake, and they overreacted as they typically do. But how can a rate cut hurt gold? that weakens the dollar.
That weakens the dollar. It won't hurt gold. I think
No.
gold's probably pricing the same expectation in right now at the same time as the markets are, because gold's still strongly over 2,400.
Oh, yeah.
I agree with you. If they cut rates, it's going to pop gold a little bit, unless it's already priced in. And sometimes you see the rumor, respond differently than the actual news. So gold would drop that day.
How many times have we seen them go back a month or two later and recalculate the numbers?
Yeah. So from a CPI standpoint, PPI too. So the July PPI was up 0.1% month over month. That's the producer price index, those who are producing manufactured goods. So it's only up 0.1% in July. Is that a decrease, Rob?
No. Last time I checked.
It's still an increase, right? And that is a benign. So like the PPI Trade Services was the second lowest on record. So they're going to spin that into really good news as if inflation's getting under control. And that's why there's this supposition or assumption that we're going to be able to cut rates. But why?
But why? Because core CPI is still over 4%.
Yeah. And that means life is still getting more expensive.
Yeah.
So now you're going to do what? It's going to be way too early, in our opinion, cut rates. You can't justify a rate cut, and you can't justify quantitative easing. Even though you have a stagnant economy, that out of one corner of their mouth, they want to say the economy is vibrant and healthy. Out of the other corner of their mouth, they want to say we need a rate cut to stimulate the economy. So which is it? It'll be a fascinating September, really from now till the election, which is another fall fundamental that could impact. What do you tend to see in an election year? What does gold move in a day, one way or the other, based on who wins the election?
I think if the Democrats win the election, their mandate is greater government spending, an expansion of Medicare and Medicaid, health care for all, a removal of health insurance to government insurance, a removal of health care to government health care. It really de-incentivizes. Socialism de-incentivizes, and that's their platform, even though they try to say we're based on joy and good feeling, but they're still driving towards socialism, and that's going to drive the price of gold higher. If the Republicans sweep, then I do expect that to soften the price of gold, at least until the Republicans can get into holding the reins of power. I don't see any change overall, though. I mean, the direction for this economy and for this government is still increased deficit spending. I don't see any major changes for the Republicans taking over. Maybe a year from now, we'll actually see some effect of cutting government agencies and trying to come into grips with the expansion of the government. But they didn't do it last time, so it's going to be a wait and see, in my opinion.
Yeah, you see short-term little blip reactions, right, Miles? And you've seen the same thing, $50, $100. Yeah. Miles, you've been here through 4 presidential elections at least. They're short-lived, little chart anomalies.
You always have the chart anomalies like right around the election. Obviously, more so depending on more uncertain years. Like there was a year there where everybody went to bed waiting to welcome Hillary Clinton as our new president, and everyone woke up and it was Trump. So there are going to be years where there's a little less certainty in the decision. And then there are going to be other years where there aren't, but there's always instability in a market. Markets prefer bad news to uncertain news. The hierarchy of things that markets like are good news, bad news, and then uncertainty. Like we'd rather have guaranteed bad news than uncertainty. And that's always been a weird thing about markets for me that I never kind of understood. I think you've been through as many presidential elections here as I have, so I think we've seen the same thing. But my assumption going forward would be, I think them lowering interest rates prior to the election is insultingly blatant and political and very bad form. And I'm really hoping Jerome Powell doesn't do that, but let's assume he does. That's going to give us a nice little boost probably across the board to all markets. We'll have a little bit of turbulation right around November. And then things will probably calm back down as we go into winter in January. But no, seasonally, I think we follow the same pattern. I think we have a strong early to mid-spring in gold next year. I think, again, we have something lackluster through the summer, although it's been real hard to argue gold's been lackluster this summer.
Very
because
hard to argue that.
It keeps putting in new highs. You know, silver, sure.
And we are in an upward rising channel
Yeah.
for gold. So barring a collapse in global stocks, I don't see gold backing off. I see it continuing to gain momentum.
Yeah.
I'm with you. Yeah, and uncertainty versus certainty. This is the most certain that a rate cut has felt since they announced in December that they were hoping to start. That hasn't happened. It does appear that's somewhat certain. CBS News even this morning, again, foregone conclusion type of talk. But uncertainty prevails in politics and in geopolitical tensions. So the Israel-Iranian tensions are prevalent. We don't know what direction that goes and under what timing. There could certainly be volatility in that regard before our election based on whether somebody wants to be bold prior to a regime change. That's very uncertain. As the other side of the coin is that the certainty in the rate cut. So you've got a push and a pull right there that we just can't predict. But all that being said, we tend to see seasonally that we have a strong fall with gold and silver, and I don't see anything changing that right now in the short term either.
No.
Nope. Well, that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, hit the subscribe button, ring the bell for notifications, and you can always find more info off our website at McIlvaney.com. You can find us on Twitter at ICA Gold or Facebook at McIlvaney Financial. And most importantly, if you'd like to discuss your personal portfolio with one of the advisors here at McIlvaney Precious Metals, you can give us a call at 800-525-9556. Thanks for listening. Have a great week.